Hey guys, it's Will here. I'm going to go through my usual routine with the stocks, ETFs, just my thoughts on the markets and stocks you can get, and all my sort of sorting and scans that I do, and how you could do this for your own situation. I'm using TC2000, and they had a recent update of their software, so it's a little bit different in some cases, but if you go to their website, you can check out some of the updates and what they've done, but I'll talk about that in a second here. But if you want to get a free trial or $25 off your purchase, your subscription, check out the link in the description below. And that helps my channel. It doesn't cost you anything more. You can try a free trial and let's check it out and see if you like it. It's very powerful. I mostly show these charts with stocks over here and sort of scans, and then the chart here with my indicators. But there's these tabs down here, and there's like, I've got financial analysis. If you click on that, I've put columns here for earnings per share, revenue growth. There's drill down where you can see what sectors are doing good. There's one fundamentals where if you want to look at PE ratios and growth and debt and all that stuff for the companies, all that stuff is here. I've got Heikin Ashi, like a tab with Heikin Ashi charts. I've got a naked chart, which is there's no moving averages or anything, so you can just focus on the price action. If I turn that off, sometimes that can help just to kind of visualize that. I've got one that's just moving averages, so I took off the price, and you can sort of see, like when you have the moving averages sort of stacked above each other, like the 80 MA above the 34, above the 50 and the 200, you have an uptrend. Like it's obvious when we back in 2021, but you see this situation was a strong trend right there when the moving averages are like that. So you can look at the moving averages. Yeah, so anyway, what I wanted to point out was I've got these scans that I do. They're like filters on the stock. So like say I have the US sectors and I want to just filter it and sort of scan for certain scenarios. You click on this check mark. And then what happens is you've got this criteria condition that I have here. So if I click on that, this is different than it used to be. So like this condition was just whatever condition like this here. But now what they do is they make everything a column. So you could turn off, like for this series of columns, you could turn off or hide, let's say, the columns now. And that includes the one that, the condition that you added or multiple conditions. So if I click on this, you can see that I've got the price percent oscillator is above the moving average, the 9-day moving average. The history is above the exponential moving average 8. The slope of the PPO, which is the momentum. So I've got a bunch of criteria. And so that's how you do it now. So if you have a, let's say, if you have a column, like if I turn this off, or that's not a good one because there's nothing in there, but let's see. Yeah, like this one, Canadian sectors, there's no conditions on it. I can go like this and go plus sign, and I can add a value or a true false. So if you're going to put a condition, that's a true false column. And then you look at your conditions that you created. It might be a crossover of a MACD or whatever your conditions are, you can create those. You can say new condition. But so that's why you do it now. You add it as an extra entry in this list of columns. And then you can decide if you want it on or not. So just so you know, if you've just recently gotten TC1000 or if you had it for a while, things are a little bit different. Anyway, one of the tabs that I have here is the stock markets, the different indices. And as I mentioned yesterday, this thing was quite extended. You can see how we had we had a down day, and now it's like, right now it's currently down 0.5% from yesterday. So once you start getting way up above the moving averages or even a trend line, if you draw a trend line like this, it's straight, and you start seeing high, quite a bit up there. That's when you probably should be careful. But you could wait for this green volatility stop. You see how high the volatility stop is above the moving average? So you could wait till it goes red. If you've got a lot of gains, you could wait it out a bit. Obviously the NASDAQ was the strongest one. So I've got a column for year-to-date change, 30%. Like that's in just a year so far. So tech has done really well. SPY has some tech in it, so it's 9%. But everything else like Dow has been down, and IWM is pretty much flat. So it's the only one. And then within the NASDAQ, there's only certain stocks that are, if you look at the year-to-date, obviously you've got NVIDIA, Meta, Tesla, Google's at 39%, Microsoft's 37%. So there's not, there's a small or relatively small number of stocks holding up the NASDAQ. And then you can see that more frequently or more obviously when you look at the sector ETFs. If I go sort by year to date for Ethereum, and like Ethereum's in a pullback right now, and so is Bitcoin essentially. So even though it had these really good 75%, 67% gains, they are pulling back. So that's when you look at the shorter duration, like you can see 30 days down 31% in 23. So the high flyers, the ones that are really big, are going to have big ups and down swings. So that's where the risk comes in. But if you look at the FANG, let's say, it's still going up quite nicely. This is, like I said, looking extended, but like it's still above the green volatility stop if you want to keep riding that out. But you've crossed way back here, and it's been a while, of uptrends here. So, and it is a fairly small number of stocks in the, the FANGs and the NVIDIAs with the AI, stuff like that. We've got the debt ceiling that's supposedly going to be settled, but then there's the, a group that's not really liking the deal that was struck. There's, I think once if that gets resolved, the next thing people are going to not really expect, in my opinion, is that they're going to raise rates in June again. Like, so people thought that we were frozen at this, we're at the peak rates right now, and then it's going to start to go down. There's a pause, and then eventually lowering the rates. But now there's a higher percent than 50% chance of raising rates in June. And I don't think, I don't know. I don't like to predict that stuff, but I'm just saying that that's not going to be good. And then if there's more signs of like recession and all that sort of thing. So, but you kind of play the price, you kind of ride the market trends and don't try to predict too much. But the FANGs, the semiconductor, because of NVIDIA. But like you see, when it goes vertical like this, you get this pullback. It's just too crazy. So buying at an entry point like near the 50-day or at some sort of slope trend line would make more sense. So most of these are tech related, like these are ARK funds, ARK Web and ARK Finance. Bots is AI. So you're looking at, if I sort by 30-day, you got FANG, SMH, this is the XLK technology, this is cloud computing, Sky, NASDAQ. Bots is AI, METV is same thing as Metaverse, it's like FANG basically. And the only one that stands out in this range is the cane, which is sugar. And you're in a pullback situation right now. As you see, you cross the MACD or price percent oscillator, and you're in this pullback with red volatility stop. So, if you're going to get in again, it's definitely got extended. So, these are mostly tech related up in here. Even Bug, that's a cybersecurity. So cybersecurity looks pretty good. You crossed up, you don't have the 50 above the 200, but you definitely broke a big downtrend here. Even this one, like this one crossed up here, had a bit of a consolidation like this. And now we broke up above that. So, that was looking pretty good back on May 23rd. So like a week or so ago. So it's still above the green volatility stops and everything like that. So today, if I go by percent change, we've had gold and stuff like that. But one of my concerns as well, I didn't mention it before on this index page, indices, my stock markets. I put interest rates in the US dollar as well as the markets and the volatility in VIX, the volatility futures. But the UUP is the US dollar index related to all the other currencies. And you can see that we had this pullback here, and we've had a good run, and we're right at that previous high and at the 200-day. So if it rolls over and goes back down, then that's good for the market. But if it keeps going up, because you've had a good rise here. Sorry about that. When rates go up, when the US dollar goes up, that's usually bad for things like gold and the stock market, tech stocks, stuff like that. And if they're going to raise rates, that tended to increase the dollar. Like that tended to, last time they were raising rates rapidly, that really strengthened the dollar. And that doesn't do well with gold and stuff like that. So even though today gold kind of went up, it's been in a pullback here. So if you draw support lines like horizontal at previous points, previous high points, you might get a bounce off of a previous, like you can see right there was a bit of a bounce there, but it hasn't really curled around and broken back up again. So just when you're looking at certain sectors, just keep in mind what the interest rates are doing and what the US dollar is doing. So hopefully that gives you some ideas. I'm not here to I don't really want to tell you exactly how I do it or what I think in terms of trading, but it's just to give you the tools and the sort of the techniques of looking at how to set up TC2000 to do what you want it to do. It's very powerful, lots of different things you can look at. So good luck with that. And if you want to get a free trial or $25 off your subscription, check out the link in the description below my video. I've got, I have the gold plan, and I've got US real-time data, so there's no delay. That's just the level that I picked. If there's limitations like on alerts or some feature that you want, you can go up to platinum, or if you might be fine with silver. There's different levels you can check out on their website. But I've had this program for years and I love it. So good luck, and we'll talk to you in the next video.